What is up, YouTube? Welcome back to Stocks by the Numbers, and today I wanted to take a quick look at Disney, ticker symbol DIS, on the New York Stock Exchange. This company right now, 80.79, down 40 cents, about 0.5% here on the day. Hit a low of 80.63, recent 52-week low just a couple of days ago, 80.53. So we have a company that has basically been getting its head handed, its ass handed to it. Forget about its head. As we see here, we go back to COVID. You can see at the top of the screen the O, the H, the L, the C. Again, that's the open, the high, the low, the close. And you can see the low, 79.07. And then they immediately rocketed it back up to above $200 a share. And then what happened? Go woke, go broke. That's the saying. And obviously it rings true with a lot of these big brand name companies. A lot of these stocks, anything that has been extremely woke, that has pissed off the public, that has forced a boycott from the public, all of these stocks have been getting absolutely destroyed. Target, Budweiser, and now you see something like Disney goes from over $200 a share. Again, this is the beginning of March 2021, and now we fast forward 2.5 years later, and the stock is down roughly 60% plus from those highs here, and the stock is sitting again down at $80 a share. So in my opinion, a couple of things here. First of all, as we say, go woke, go broke. So Disney puts were a layup. In my mind, this whole time, basically, I would have been betting against Disney. Even as of late, also, I've been calling out some puts on Disney in the Discord. It was about a week or two ago, and then again recently, last week and today as well, I re-mentioned the puts on Disney. And basically what's going on is you're dealing with a company that, in my opinion, like all of its flagship movies and shows and products and services are kind of taking a hit. So now you have the company kind of like branching out, trying to look at all of these other options that they can, all these different roads that they can potentially go down. And I'm not hearing very good things. Now, I know if you go on a place like StockTwits, a lot of people are saying, Disney got beat up. Obviously, it was up at 180, 190. Now it's down to 80. We're going to burn the shorts, buy Disney, blah, blah, blah. And listen, I can appreciate that strategy. However, at the end of the day, if a company sucks, it's just going to keep getting shorted, and Wall Street's just going to continue to beat it up, whether it's billionaire hedge funds or whether it's, small-time active day traders who are just in and out of some puts here. So basically, the way I'm looking at it is the last time it had that little pump on that ESPN announcement, right, as soon as it was going up, I was calling for puts on the Discord. And the reason being is because if you really think about it, I don't see how a massive powerhouse like ESPN, first of all, it shouldn't be struggling, right, but it is. And second of all, to explore a sale of something that is supposedly a positive, that just comes as a huge negative to me. So I understand that the stock was rising because obviously Disney could come into some money if someone wants to step in and take a chunk of ownership on ESPN or whatever the heck. I know they were talking to like the MLB and the NBA or whoever the hell they were talking to. But long story short, again, if you have a powerhouse company like that underneath your umbrella in the whole ESPN brand and all of their channels and whatnot, and that is struggling, now you're looking for like a capital injection to help probably not only just the ESPN business, but of course the overall business that you've been losing. In my opinion, that's a big negative. That's not a positive. Even though, again, I understand the stock may react positively because they have some capital coming in, but on the flip side, it really should be viewed as a negative. And again, when that announcement was made, I was calling for puts when the stock went up. And as you can see, I wasn't crazy because over the last week or two, the stock continued to slide down. So now they're talking about Comcast, and Disney stepping in on Hulu. And now, again, I understand the move towards digital streaming and, all of these companies, Hulu, Roku, they're all doing very well. I understand that. I can appreciate that. But again, I look at this as a negative for multiple reasons. First of all, Comcast CEO saying, oh, it looks like Disney's going to write us a big hefty check, right? You got articles coming out like crazy talking about extending the deal, so they're looking to get paid from Disney. Now, the way I'm looking at it is, if you're spending that much for Hulu, I understand you may want to expand your your streaming footprint there. But again, see, to me, that comes out as a negative, because you shouldn't have to be buying Hulu. So what that tells me is Disney Plus has to be struggling. It has to be. I think some subscribers went down. So I'm assuming that either A, Disney Plus is struggling and they need like more streaming income and they think Hulu is a good fit. Or B, the rest of the business, the theme parks and whatnot, the merchandise, right? All of that may potentially be struggling. So now they may just be trying to put more eggs in the basket of streaming services so that they can quote unquote, have that like consistent guaranteed monthly income from these payments and whatnot. So it's like a couple of years ago, it would have been a very interesting story, right? Disney growing, they got into Disney Plus, we're coming out of a lockdown, boom, they step in, they buy Hulu, right? So a couple of years ago, I think that Wall Street and the public would have reacted positively. Instead, now we're acting negatively, because it almost seems like Disney is just drowning and it's just, frantically trying to grasp onto anything to keep itself afloat. And again, this is more coming back to when we talk about the psychology of a stock as opposed to the actual price of a stock, because if you do talk to, again, these random people online, it seems like a lot of these younger kids are pretty bullish on Disney. And maybe it's because it's a company they know, or maybe, again, they just feel like it was worth so much more, and now it's just getting completely crushed that, they can step in here on some cheap calls a couple of weeks out and try to catch a nice pop and make a nice return. As everyone else is selling, they're buying, right? So definitely an understandable strategy. However, in the numbers, if they really wanted to, they could continue to bring Disney down, in my opinion. We have a market cap of $147.8 billion. Company's trading 66 times earnings right now. As you can see, the EPS has been a little wishy-washy here. Over the years, though, revenue has kind of consistently increased, especially coming out of 2020. However, you can see, look at the profit margins here, was north of 21%, drops down to about 16%. Then, of course, obviously everything was locked down, understandable, everyone's numbers dropped. And then you can see coming out of the lockdown, look at the profit margin here, just sitting at 3%, about 3.8%. So, they're rebounding. However, look at the revenue going from 69 billion up to 82.5 billion, yet somehow they only made about 3.8% off of that 82.5 billion. So, I can understand why a lot of people, again, are just waking up and just betting against Disney. If we switch over here and we look at quarterly, you can see they had a couple of quarters where they were kind of rebounding here at this profit margin. And then as of last quarter, the company goes net income negative, as you see, losing about 2% on roughly $22.25 billion. So I have a feeling that Disney will continue to struggle. Again, we hit this COVID low here back 79.07. In my opinion, I think we can easily touch that again. Excuse me. But as you can see here, from the low of July of 2022 going to that high immediately of August of 2022, you can see now that the stock is kind of in this widening trumpet, meaning, again, the trumpet, they're not really sure where the stock is going to go or where they may want to take it. Now, drawing from the bottom of this candle, to where we recently hit just the other day, you can see we have our support line there now, and the stock is right at that line. And of course, this other blue trend line is drawing from the bottom of the low hit back in March of 2020. So this right here is actually a very key level for the stock, which in my opinion is why it may have dipped down to like that 80 and a half, 80, 60 mark, and then immediately tried to bounce back up and try to rally here. There are a couple of things taking place. Again, excuse me. There are a couple of things taking place here again. We have these not only do we have these support trend lines, but also just going back to, February. So over the last about 6-7 months, it does almost look like the stock is in this descending wedge and we could potentially have a bounce up. But in my opinion, I actually think with this new news, we're going to break these support trend lines and ride this bottom trend line here of this wedge. And as you can see here, if we kind of were able to come out here going into like the end of September, we could see that 79, potentially even 78 mark before it bounces off that trend line and potentially pops out of this wedge. Now, of course, again, this is, just me giving my prediction here. Anything can happen, of course. And even if we look today, we can see right here with this huge spike and drop, this was supposedly when the report came out talking about the extension. And as you can see, right as the news hit, the stock initially dropped down to about 80.80. Then it had a massive explosion up to north of 82, because I guess everyone jumped in and started to buy the news. Look at the volume that came in. And then, of course, everyone kind of went the other way. So what we're seeing here is kind of a situation where if it's up shorted, that's kind of the gist of what I'm seeing here, looking at a company like Disney over the last couple of weeks. If it's up shorted, that's how people are playing this. So with a company that everyone's betting against, now a part of you may say, well, if everyone's fearful, isn't it time for me to be greedy, blah, blah, blah. But remember, you also have to deal with the mass psychology that the average person is having about Disney. And I don't know, how much time you guys spend on YouTube, but when I go on YouTube, I'm constantly seeing these videos talking smack about this chick who's playing Snow White now. So, that's what I'm saying. If, like, every actor that does anything through Disney pisses people off, or if, the writing that Disney implements and puts into its shows and its movies is pissing people off, like, you know what I'm saying? Like, it's only inevitable that the stock is going to continue to go lower, in my opinion. And again, if they do complete this Hulu deal, let's just say in the next couple of days, hypothetically, I'm sure you may potentially see a pop in the stock, even though, again, in my opinion, going back to the beginning of this video, I kind of laid out how I feel this is actually should be viewed as a negative, not necessarily a positive. So maybe a little speculative, but hypothetically, let's just say now they sign this deal, and let's just say the stock pops back up to like 82 and a half. In my opinion, I would be a put buyer. And, even if they want to keep it flat or up for a day or two after that news, I still do feel that this stock is going to go lower. And, again, that's kind of what we saw here going back slightly before 11 a.m. when the stock had that pop on this quote-unquote positive news. And then I'm sure a lot of people just started laughing their asses off because they probably stepped in and bought puts at 82 plus, or they stepped in, they shorted shares, and then obviously the stock immediately drops down and almost hits a new 52-week low after having the pop above 82. So we have an interesting scenario here. And again, the market cap a touch below 150 billion. And if we look at what they did last year, north of 82 billion. So the stock right now is trading what, like 1.6, 1.7 times last year's revenue. However, again, as of late, just looking at the last couple of quarters for 2023, it appears as though the company itself overall has been struggling. So they may continue to just beat this baby up and bring it down into the 70s. Now, chances are, after they do bring it down, it's going to be one of those plays that they stop talking about, it starts flying underneath the radar, and then before you know it, you're going to turn around and the stock's going to go from the new low of 78 or whatever, and then all of a sudden it's going to be back up to like 104. and then everyone and their brother's going to start talking about it again, because that's usually the way they play it when it comes to alerting the public here. As you see, we have no dividend anymore, which the company used to pay, and also the company has missed on revenue for the last 2 years in a row, missing on the EPS side as well alongside of that revenue. So obviously this company is struggling. We can look at the debt absolutely exploding, going from over 20 billion to north of 46 to north of 62. Here we go, COVID times. And now again, the debt has slowly been chipped away at, which is a positive. However, the cash and the cash flow has been dropping as well. Now we have short-term liabilities outweighing short-term assets. However, in the long term, they still look pretty healthy. But I just feel like we may potentially have a bunch more negatives just kind of rain clouding over this stock compared to just saying, oh, well, look at the numbers, it's undervalued, it's too low, it should go higher. It was over 200, it's going to get back up there. People forget, when it was up at 180, 200, there were a lot of people, including myself, that would look at a stock like that and say, all right, it's overvalued, now it needs to, come back down to earth a little bit. So, again, kind of a little bit of a mixed bag here, but you can see some of these numbers are kind of bouncing around. You could look at the cost of goods at a Q1 of 23, big jump compared to Q1 of 22. However, they kind of tried to fall back in line here, and you can see cost of goods sitting just a touch below 16 billion for the last couple of quarters. And again, the gross profit, which again is the revenue minus cost of goods sold. So this gross profit number, as you see, has increased slightly for the last several quarters. However, isn't really, back at 6.5 billion, but isn't growing the same way it was back in 2022. So kind of difficult to tell. And as you can see here again, the operating expenses as of last quarter up to 387 billion. Minus going back to the end of 22, that's kind of the highest it's been. However, the operating income is obviously the highest it's been, going all the way back to Q2 of 22. So that's why I'm saying it's like I almost feel as though you're kind of going to have to follow. And see, I don't want to say follow the public, because for some reason, a lot of the public is calling for this stock to go up. So I'm not exactly sure how to word this for you. But I just feel, in my opinion, that the negatives are outweighing any positives. And again, some of these numbers look kind of decent. Some of these numbers do look like they're lagging a little bit. But I just don't know if I would be a buyer of Disney here, even with the stock dropping down here to these new lows. You can see assets haven't really moved at all going back the last 6-7 quarters here, even though, again, liabilities have been slowly dropping down. So looks like they're trying to pay back this debt a little bit, right? We have a book value per share right now of about 53 1/3. The stock is still above $80 a share. If we switch over here annually, you can see book value per share a little over $52. Right? And the company holding tens of billions of dollars in debt right now. And of course, as we mentioned, the liabilities have exploded. So again, looking at the numbers, kind of a mixed bag here. You can see the cash flow just taking a big hit here over the years, going from 8-9+ billion. Now we're down, we're trying to maintain like 1-2 billion and change. So obviously the company is struggling. You really don't need me to tell you this. But if we look here, you can see, look at how high the PE was, right? This is back in 2021. You can see the PE was north of 160, right? So this is why people may just be looking at previous prices and looking at current prices and saying, oh, it sold off, it's cheap, I'm going to buy it. When in reality, again, a lot of these metrics may be showing you that it's going to continue downward as opposed to upward. back here, you can see 17, 18, 19. This is when the company was really rocking and rolling, and you can see, look at the price to cash flow sitting, 11.5 to like 12.5. And now, even with the company dropping down, the price to cash flow is still north of 19.5. So that's why some of these numbers, again, could be viewed as overvalued, and they could continue to pull it down. Right now, trading 1.5 times book value, going all the way back to 2016. That is the cheapest it has ever been. However, again, it has gotten like more and more woke and pissed more and more people off year over year. So, now it's just getting chipped away, losing its value, showing an enterprise value north of 197 billion, which is roughly a 33% move from here, which would bring the stock up to, I don't know, like 107 or something like that. However, I seriously doubt anyone's going to step in and buy out Disney right now, especially with all the trouble that they've been causing. But looking here at the gross margin percentage, you can see it was sitting well above 40%, even above 30%, just healthily hanging out. Now it drops down into the 20s, has been rebounding for the last couple of years, really, since COVID. However, still roughly 25% lower than where it was before all this shit started. Operating margin, same thing, right? Was down to 5, 5.5, climbing up to 8. Now it's at 11.8. So a lot of these percentages are looking very, very well. However, again, we go back to before the shit hit the fan, and you can see that they are less than 50% of where they used to be. So again, this is why when a company like falls from its highs like this, as soon as any of these numbers come out and they're lower, or you see they're struggling, or cost of goods went up, operating expenses went up, whatever the case may be, that is when Wall Street steps in and beats the crap out of a stock. And that's what we're seeing here. Because not only do you have Wall Street doing it, but now you have the individual investor doing it as well. EBITDA, once again, earnings before interest, taxes, depreciation, amortization. As you can see, maintaining above 30% for several years, even going into, this is 2020, right? Oh no, this is 2019. So 2019, you can see it dip below 23%, then it dips down to sub 14%. Now, since then, it has kind of hit that bottom and made a nice U-turn here, sitting at 17.85%. However, again, about 40% lower than where it was several years ago when times were good. And the net margin percentage, of course, we looked at before, the company going net income negative, as you see here, minus 2%. And you can see there was another negative year, forcing them to, again, struggle a little bit back in 2020, of course, but everyone's numbers dipped down. But as you see, before everything really started to go to crap for Disney, the company was maintaining that mid-teens to as high as 20+% on the profitability side. Now they're basically flat and potentially negative. So again, we have some positives, we have some negatives. Look at something like the inventory turnover has just been consistently rising, getting up to 38.68, now taking a slight dip down. So that actually wouldn't be viewed as a big negative for me. This is actually a very nice positive. However, the rest of the numbers kind of look like shit, so kind of understandable why it basically cancels out this inventory turnover metric. If we look at the asset turnover, again, as you see, just another little definition for you guys here. Asset turnover, revenue divided by total asset. Asset turnover can be used to measure the effectiveness with which a company uses its assets to generate income. The higher it is, the more efficient the company is, since higher ratios mean that the company generates more income per dollar of assets, right? Obviously, if it's lower, it's worse. Now, as you see here with the asset turnover, again, the assets seemed like they kind of plateaued and have just kind of flattened out for the last couple of years. And you saw that increase in debt and liabilities over the years as well, even though technically it has been going down a little bit. You can see the increase in this turnover ratio just for the last year or two. But again, you can see several years ago when everything was rocking and rolling for Disney and it looked like they were taking over the world, we had this asset turnover number at 0.61. Now we're down to 0.42, which obviously is roughly a 33% decrease over the last 6 or 7 years. And again, even before the shit hit the fan, you can see asset turnover of 0.61, and it has just not even recovered anywhere near where it was. So again, the company does have some positives, but I just feel like these negatives are heavily outweighing the positives. Well, once they cut the dividend, in my eyes, I viewed that as a massive negative. And obviously that happened going into 2021, and along with all the other negative shit that they've been dealing with, obviously they have been dropping in value. But you really don't need to be a rocket scientist to see what's going on here. Now, as you see, for 2023, they're estimating 89.1 billion. And if we come over here, we have 23.9, 21.7, so we're at 40. That's about 45 even. So this is 67 and a quarter. Right? All I just did was add up the revenue for Q1, 2, and 3 of 2023. And right here, we had, what did I say? 67 billion. So now that means that in this last quarter, the company has to post north of 22 billion for the quarter. And as you see, minus this dip here to 21.7, the company has been above 22 billion for 2 of the last 3 quarters for 2023. So very possible that Disney breaks this losing streak and actually comes out above analyst expectations on the revenue side, above this 89.1 billion. However, they're still forecasting bigger and better growth here moving forward for Disney. And again, overall as a whole, the company has kind of tried to maintain its business. However, I really do feel that the people are going to continue to batter and beat up this company. And I have a feeling that potentially more people will move away from Disney or make it their business to not give Disney any of their dollars, compared to new customers coming in looking to give Disney their dollars. Shout out to the Discord real quick, because I mentioned DIA puts right at the open, and as you can see now, the Dow is down roughly 300 points. I said Dow should be minus 300 today. NASDAQ should go down to 15,200. As you see, it just broke 15,300 as we speak. So shout out to the crew in the Discord again. Another quick reminder, you guys, Discord link is in the description of every video, and sometimes the link expires. So if the link does expire, just let me know in the comments section. I'll make a new invitational link for you guys and repost it to you individually, and of course I'll replace it in the description of the videos. But again, with all of the quickness of the market and the way we're in a trader's market, in my opinion, you really have to be in and out. It's very hard to buy and hold unless you're really getting in at a good price entry. So again, even if you just want some updates and you want to talk about a couple of quick trades, in my opinion, you should be in the Discord. But of course, that's entirely your own prerogative. But getting back to Disney here, again, 89.1 billion, I think they could do it. I really do think they could do it. And again, the company came in last year, 353 a share on estimates of 378, now estimates of 372. And as we see, last quarter, the company went net income negative. So that's why, even if they beat on the revenue side, it may be the profitability side that continues to beat the crap out of this company. Because again, if they come in, 3.5, 340 or something like that, trust me when I tell you, they're going to continue to beat the company up. However, moving forward, looking at these forecasts, I'm really not sure if they took any of this recent wokeness backlash into account. But as you can see, looking for steady increases in revenue moving forward into 2025 and 2026, and obviously the EPS is going to follow suit. Now, obviously, only time is going to tell, but in my opinion, again, if they do hit on the revenue, which looks very feasible, I have a feeling that it's going to be a big miss for the year on these 2023 EPS estimates, and I think the stock is going to take a hit on that news. We're looking at everybody, okay. Okay. But again, this right here, in my opinion, was the telltale sign. Because again, even supposedly, as everyone wanted to say it was good news, the RSI was in the crapper, now we got this, this news about the Hulu extension, and they're looking to expand, their streaming, and they're going to absorb Hulu, and it's going to be good, As you can see, again, the stock popped up to above 82, and then not only immediately gave it back, but of course went lower than where it was before the announcement was even made. So that's why, in my opinion, I'm really viewing all of this recent news as negative, not as positive. Now, I'm sure a couple of people watching the video may have just stepped in on these lows, and you stepped in, you bought Disney calls. Hey, listen, in the short term, if you catch that pop and you make yourself a nice little, quick return inside of a few hours or a few days or whatever, fantastic. I'm so happy for you. I hope everyone makes money. But again, looking just a little bit more at the longer, broader picture, I have a feeling that Disney is going to continue struggling before it has that rebound. Now, a lot of people talking about the RSI. We're looking at stock charts here, and as you can see on the daily, the RSI is sitting at about 31.7. So, of course, when it hits that 30 benchmark level, it definitely could bounce higher. However, again, even going back to, March, you can see that the RSI has been below 30 at some point. That's why we say, when looking at the RSI, yes, 30 is a benchmark potentially for a stock being oversold, and 70 is a benchmark potentially for a stock being viewed as overbought, so it should reverse. But again, these are not guaranteed metrics. These are just benchmarks. So again, this RSI could drop to 21 and the stock could continue to sell off and Disney could hit new lows of $78, $77 a share, right? Anything is possible. So that's why just looking at one metric like this makes it it lowers your success rate if you're only looking at one or two things that potentially line up in favor of the trade you're trying to take. You know what I'm saying? That's why I always say don't force trades, take what the market gives you, and that's why it's like it's almost giving it to you on the technical side. However, again, on the psychology side, the wokeness side, the fundamental side, looking at a lot of those fundamental numbers, we can see that the downtrend could continue. Looks like the MACD has just been consistently slipping basically since about the middle of August, and you can see it had that nice pop up there. I believe that was earnings. I believe that was when the company missed earnings and the stock rallied like 5% that day or something. And I was calling for puts on Disney in the Discord like you cannot imagine. And I think a couple of people actually stepped in, bought some time, couple of weeks, couple of months out. And then as you can see, Disney completely gave it all back, broke the 50-day moving average, shit the bed down here, down to the bottom Bollinger Band. And we had people make several 100% returns on Disney puts because of that call out in the Discord. So, again, just another shout out to the Discord crew. But we switch over here to the weekly now, and you can see this bottom Bollinger Band, 78.88. That's why I'm saying we could potentially retest those COVID lows down at about 79 and change. And of course, with the major indices selling off, I mean, that's just adding to the whole situation. So, again, trying to time the bottom and be a stock savant and catch it right at the bottom to try to catch that rebound. I mean, listen, if you're able to take that risk, go for it. And I really do wish you the best of luck. But I have a feeling that the trend is going to continue. I really do. It looked like the MACD was almost trying to flatten out and potentially cross here back after those earnings, it looks like. And then obviously, as you see the last several weeks, it has just completely fallen off. And now the MACD, that spread has widened a little bit with the MACD dropping down. RSI on the daily sitting at about 32 1/3. Now that's what I'm saying. We're approaching that 30 benchmark, but nothing is guaranteed, and that can really not be your main indicator for pushing the buy button. As you see here, going back to, where is this? Is about the middle of 2022. You can see, look at this RSI, completely shit the bed, right? Broke below 30 and was staying there for quite some time. So, again, I can appreciate the fact that you might have a MACD crossing or you potentially have a low RSI, but I want you to really look at the overall picture. Because if you step in here just thinking that the RSI is too low, you're going to catch a pop back up to 84, 85, and then over the next week or so, again, all of a sudden the stock's dropping to new lows, 79, 78, 80, right, 77, 90. Like, you can't be surprised, right? Because you're trying to time a bottom and catch a pop of a company that everyone else and their brother is betting against. So take what the market gives you. I would rather you watch it drop to 79, hit new lows, rally back up to 82, 82 and a half, and then you step in on confirmation that we're having a little bit of a rebound, right? Because, again, playing it from 82 and a half to, let's say, 84 and a half, yeah, you may have missed out on some profits. However, again, by confirming that the bottom was hit and letting Wall Street find it for you and bring it back above a support level potentially, that is just going to confirm the trade even more and increase your success rate, right? So again, don't force trades. Take what the market gives you. This 50-day moving average here, 94.65. Probably going to be a while before it gets back up there. That 200-day moving average, they're going to need a lot of positivity to get back to that level. And you can see here on the daily, the 200-day is about 94 and change. So that would be an excellent key level. The problem is it's just too far away. And now, as you can see, even yesterday, you can see that it basically looks like the stock formed a bearish hammer here, which of course is bearish, meaning we should go down again. And now you're seeing, again, the markets are selling off as well, so that's kind of adding to it. But right now, it actually looks like it's forming another bearish hammer. And as you can see, the bottom Bollinger Band on the daily, 79.84. So that's why I kept saying in the Discord, in my opinion, the stock is going to break 80, below 80, and we may potentially hit new lows and touch those lows made back during COVID at 79.07 or whatever it was. But I'm going to end it there because I'm talking too much. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop them down in the comments section. I'm usually very quick to reply. Like the video, thumbs up, algorithm, helps me get more eyes on the channel. Subscribe to the channel if you have not already. That is our handshake agreement. I will do update videos on the small cap spec plays like our Soundhounds and our Stems, our Fubos. I will try to do update analysis videos on larger brand name companies, like I just did Campbell's Soup. Now we're looking at Disney. I don't care if it's a $500 billion market cap blue chip company paying a dividend, or if it's a penny stock that you guys want us to take a look at. Obviously, any penny stocks are extremely more volatile and risky than buying a brand name company like this, but I'm sure you guys all know that. The point being, I will do that for you. I will give any day trades in the Discord, and I'm constantly updating everyone in the Discord about the 10 and 20 year yields and how they're affecting stock prices. I've been giving updates on oil, the dollar, gold, and silver as well, along with a lot of the other individual stock plays that I've been calling out in the Discord. I am doing all of this for you guys. All I ask, do me a favor, handshake agreement. If you want to take advantage of all this content, you want to take these trades, potentially even make yourself a couple of bucks off my recommendations, fantastic. Do me a favor, push the subscribe button. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and they're volatile and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. I want everyone to stay sharp, stay focused, stay positive. Thanks for stopping by. I'm going to catch you guys in the next one.